Hey everyone, welcome to my YouTube channel. Dave Ganderos here. This channel was created to share information with you regarding ways I'm generating streams of income online. And if you're interested, please consider subscribing to my channel. Click the red square here. Click the little bell to get notified when I put out a new video. And then please like, share, and comment this video so I can get some feedback from you guys. In addition, make sure you check the video description. There'll be timestamps in there for you to jump ahead if the video is too long for you and you want to watch specific areas. In addition to that, just remember that there's a crypto giveaway that's going to happen when we hit 2,000 subscribers. So consider subscribing and clicking the little bell so you'll be alerted when that happens. In the video description, I share with you, again, timestamps. I go into a little bit of detail what the video is all about. Income disclaimer, I'm not a financial advisor. Please make sure you do your own research and figure out if whatever I'm sharing here is for you. This is an educational channel. I'm trying to share technical analysis and ways that I go about doing that. And ideally, you take away some concepts and ideas and practice for yourself. I have other topics that you can comment about and ask me to talk about. I have other opportunities. For example, the video that I'm showing here was related to the Forex trading software. I kind of talked about Forex pairs, and then I went into how the trading software could be used to, in addition to your technical analysis, if you have it, or if you don't have it, you don't really need it. You can trade without the Forex technical analysis insight if you follow the strategies that are part of this program and this software indicator that we have here. So consider jumping into my Telegram group for more information. Here I didn't have enough room to put some other video content, but typically I'll have a list of videos that you can refer to. And then finally, some ways to contact me. So please, get in touch with me. Let me know if you're interested in the trading software. If you're interested in this opportunity here. I'm going to be talking about that tomorrow. It's going to be time to compound again. I'm almost up to $100 a day. You can use this one for lead generation to build your team if that's what you're looking to do. And then this is just a blog I put together. Haven't had a lot of time to update it, but it's on my to-do list. And you could go check out the articles that are there. They're all still very important articles. The concepts are still there. So even though they're not brand new articles, you might take away some information from reading them. All right, so let's get into the charts. We're gonna go over another set of 4 charts today. All right, UniSwap, Decentraland, UniSwap, Litecoin, and StormX. So we got some updates to do. Things have progressed since we did our last video. You can see here I showed you the big picture Elliot wave idea here. So, we completed wave 2. Now we're going into like a 1, 2, 3, 4, 5 into a wave 3. We hit a double top here. It's retracing a little bit. At some point, we hope to see this break through. So right now you shouldn't, either you're in a trade from 2 or you're looking to get a good retrace on this little mini 1-2. To get into another trade. So let's this is on the daily. So on broad picture we have retraced from 2 to here 0.65. So right here was a good area if you're playing the Fibonacci retracement idea. Any patterns in this area from 0.5 to 0.65 is a good area to get in for the next push higher. Although this has a double top, which is a little bearish, you could still consider trading the Fibonacci retracement. So it's in the DCA area. Let's make this green. Let's make a text. DCA area for next push up. All right, so you got to consider if that's for you. Let's drop down to a lower time frame to see if there's anything more that might be showing its face. No, kind of the same thing. It's in like a it's in a nice retrace here. If you draw the trend lines, You know, we're in a nice channel here, and we're just waiting for the breakout. So it is within the DCA area to take, you know, to start positioning yourself into a trade. And then you know, the only thing I could say is this is kind of impulsive, so this might be like a bull flag. So depending on where this breaks out, this could be another area for it to take off. Give me 1 second, I'll be right back. Alright, sorry about that, guys. My little puppy came and wanted some attention, so I took a little break to play with her a little bit. So you can see you're in the DCA area here, so depending on how you feel, you can consider buying into a position, or you could just wait for price action to break above this trend line. Breaking above the trend line is a safer bet. You got to make sure, like always, to wait for the breakout, wait for the check, and the check might bring you back down into the DCA area, so you might get a good buy, and then you get into the trade. So depending on how quickly or how long it takes for this to happen, the breakout and the check might be in this DCA area, which would be perfect for an entry for a trade. So that's where we are with Decentraland. All right, now let's see. This is UniSwap. So UniSwap, this is on a daily time frame. So we're pretty much in this range here that we talked about. Although it came below a little bit with that, probably with that whole sell-off with the Facebook stuff that came out. But we got back in. Now we're going to be ranging inside here. And the lower, well, we got a little pattern showing up here. Oh, this is the 4 hour, so it is a decent pattern. So let's draw it out. Triangle. From here to here to here and to here. So we're currently, actually it's currently breaking out right now. You can actually even say that it might have confirmed already, because it broke out, came back, it wicked back in, but now it's staying above. So this would be a good time to get into a trade if you're not in one. And we could figure out some targets on this pattern by going from, just basically going from the height of A to B, which is equal to what I just did here, and then placing this at the point of breakout, which I guess would be here, maybe here, maybe right there. And then you look, it's taking you right up to this next zone that we have drawn here. So this is in play. If you weren't in a trade, you could take a trade pretty quickly here, and you know, try to scale out a little bit. Don't go for everything at one time. Scale out of some when it hits this range. You know, just remember the resistance is going to be at the previous pivot, so there's going to be some resistance here. So I mean, you know, you see where it closed. So the wicks, that's all resistance zones. So somewhere in that zone, you got to consider possibly taking some profits. And then, of course, you got the target of the pattern, which is very close to this upper resistance level. So you might want to take some right before it starts hitting this area, because you're going to see some resistance on this area. So pretty cool. That's where we are with this. There's nothing really else to say. That, you know, there's a trade pretty much in play here. So consider getting in and setting small profits. Don't go crazy. You know, don't let greed get you, and just take some profits at this previous peak of an A, and then the pattern target. You know, if let's see some numbers here. So pretty much like 32, maybe to be safe, 32.35 or so, something like that. 32.35, and then another maybe at 34 you take some, and then you could take some up here at maybe 34.5. So those are the three areas that I would consider taking some profits. And we're probably going to see some bouncing between these two zones. So just get in and get out. Wait for the retrace back down here. Maybe a new pattern will show up here and you can get in again. Alright, so that's it for UniSwap. Litecoin. Alright, so we had a little bit of a fake out here. Came up a little bit, came back in, wiggled around. You notice here, this is pretty cool. Remember we talked about the Pitchforks, price action is going to have to make a decision. So it looks like the decision was to go up. So we can get rid of this downward facing Pitchfork now since it's no longer in play. And now we can, since we have some more action over here, we could tweak this a little bit to see what makes sense. So maybe put a couple touch points in here, somewhere around there. You see a touch point there, a little wick in here. Let's see what it looks like. Let's zoom in a little bit. Yeah, so that looks pretty cool. If you could see, you know, when you really start getting down to the, I mean, you really want to put this on as close as possible to the exact wicks here. But you want to try and get as many touches as you can, because then that's basically just like a trend line that shows that, you know, it's being respected. It's a little hard to do. You just have to do trial and error and zoom back in. So we can get rid of this because the decision was made to stay up. So here we crossed, you know, a couple, so touch there, touch there, touch there, touch there. So 4 nice touches. We got the touch down here as well. Let's just make sure that that's actually on the D there. Okay, perfect. All right, so this is what it's looking like. It broke out. Now, basically what you're doing here is you got to wait. You got to wait for this test. It broke out. Now it's coming back down. Wait for it to check this area. And again, this area might not be exactly on the line. It might be a range. So if it comes back down here and starts bouncing back up, that's okay. And then when you get into the trade, you put your stop loss underneath this trend line, and you wait for price movement to move up. Once price action moves up, you know, it starts, maybe it's not going to move exactly like this. You know, this is just me talking about the check. Price action, you know, is going to have is ups and downs. So for example, let's see the check is like that, then it goes up. It's not going to go straight up. There's going to be some retraces. There'll be retraces as it moves upward. Each time it does a retrace and pivots, those are times you should be moving at a minimum when this happens. If you don't want to go all the way up here, at least make your stop loss equal to break even. Break even plus a little bit more to cover the fees, and then you have a no loss trade, right? You can wait for it to go higher and move it up when you feel comfortable moving it up. You know, there's going to be resistance here. You know, I got this zone drawn pretty wide, but reality is that, you know, this A is going to give you some resistance. So you want to consider getting out somewhere up here, a portion of your trade, and then you follow it up higher. So, you know, this is the target of the pattern from the A to B height. So this is, you know, again, this is another area where you would want to take some profits. You know, maybe a little bit below the target to be conservative. Now, I don't know, I don't remember this other green zone. All right, so this other green zone that I have drawn here is related to that peak way back here. So somewhere up here, actually, we should probably draw it down here. So let's bring this down a little. Let's bring it over to here. So somewhere between that close and that wick is going to be another resistance zone. So as you're in the trade, you know, certainly you have two zones up here that you're going to have to worry about. You got the pattern target, and then you got the overall price action resistance on the upside. So consider, like I said, scaling out. Scale out 25% here. Consider somewhere maybe in the middle here to take out a little bit more, take out some more here, and then, you know, just bring your stop loss higher and higher along the way to guarantee yourself the profits. All right, next one, StormX. All right, StormX hit the pattern target right here. So if you were in a trade, congratulations. If you had your stop loss behind the trend line, you might have had a little wick here, but ideally you waited for price action to move up again, and then you were safe. You were safe all along the way. Now, depending on how aggressively you move the price stop loss up, you might have gotten stopped out. There's a lot of wicks here. So that's the danger of over leveraging your account, where you can't leave enough room to breathe. You know, if you put a lot of leverage in there, your stop losses have to be pretty tight, and you have the higher probability of getting stopped out. Now, if you got in down here and you got stopped out somewhere up in here, it's okay. It's still a winning trade. You didn't lose. But it's nice to see the price target was hit based on this pattern. And now I don't see any new patterns other than this retrace. We have a retrace of these pivots. We could see where the retrace is from this wick to this wick. We're in the 0.5 to 0.65 range. Let's drive a little bit deeper. This is on the 4 hour. Let's see if the 1 hour gives us any kind of patterns. And I really don't see anything here. The only thing you could be playing here is a Fibonacci retracement for the next push higher. I don't see any obvious patterns. I mean, you got the standard downward sloping trend line, which you could play the breakout of that, and you got the channel, you know, that might be forming in here a little bit. Possible little channel there. So you can wait for the breakout of this trend line for the push higher, and as the price action moves over here and the breakout happens or in the dollar cost averaging area, then that would be a good trade. So if that was the case, if price action continued to kind of, you know, cycle through here, move down here, and now you're in here, once this breakout happens and it comes back and checks and then pushes higher, this is where you would enter the trade. And again, the same kind of thing I just talked about. You know, you got to figure out where the targets are going to be. So certainly you're going to see some resistance at these levels right here. So at this fib level, you're probably going to see some resistance. Of course, you see this big wick up here. There's going to be resistance in here. You know, it's pretty big range. You know, so if you get in down here, you might want to consider, you know, just taking profits somewhere around here, because this seems to be a pretty big wick. Let's go back to higher time frame. Yeah, so we're in price discovery. Other than this crazy, I don't know what the heck this thing is. What the heck was this thing? Look at that. Anyway, that doesn't count. That's a glitch, or if it happened, it was a flash, and it doesn't really play into our analysis here. So we're in price discovery mode right now, you know, up here. So once it breaks above this previous peak, we don't know what it's going to do, right? We could just risk management and be smart about it, right? I mean, you can argue that we could do a one-to-one fib extension from here, from the low to the high to wherever the bottom we think is. Say 0.65 is the bottom here. Then, with that being said, we have a couple more targets we could focus on. If it breaks past this all-time high up here, then we can say that the algo target will be up here, pushing it higher. And then right behind that, we got the 1.0, one-to-one, like AB is equal to CD type of thing, where this run will equal the next run from the low. So that'll put us up here. So you got some obvious targets here. Let me just draw these out wider, depending on how long price action takes. So again, there's, the trade is down here, and you got to consider when to get out. These are a couple levels here. Just if you play proper risk management and you move your stop losses higher, you can let your trade breathe. And as you move your stop loss above break even, you guarantee yourself a profit and not a loss. So again, that's a common theme of all my videos, and it's one that you should really consider, consider implementing in your trading plan. So I guess I'll leave this pattern here. I'll just get rid of some of these other things. It's not really in our way. It's not too cluttered. We'll see what happens with this. See what price action does over here. Again, you're in the DCA range, but you really want to wait until you see a bounce, maybe off the 0.65 or 0.618. When it breaks above this trend line, is a safe bet in terms of getting into a trade. So you could be a little bit more risky if you want to get into a position now, in case that it doesn't come down much lower and it automatically all of a sudden spikes higher. But I have a feeling that Bitcoin's going to be running a little bit soon here, so we might continue seeing some consolidation or weakness in the altcoins. So just be very, be careful. Be careful. Don't chase something before the pattern actually happens. So wait for the breakout. If the breakout happens, then wherever that is, just make sure you wait for the check of the trend line and then get into your trade when you see it pulling away. Use proper risk management. Alright, so that's it for the charts. Again, just a little update on these charts since we didn't look at them for a couple days. Practice this stuff on your charts. Draw these patterns. Set the traps for the price and wait for the price to fall into your trap, and then you execute the plan that you've created for yourself. Creating the trading plan is very important. Creating your risk management plan is very important. Typical percentages per trade is anywhere from 3 to 5%. You don't want to risk any more than that based on your account balance, whatever your account balance is. So for example, I just changed my keyboard so I don't have a calc sheet shortcut. Just to give you an example, depending on what your account balance is. So for example, say you have $1,000 that you want to trade, and they basically give you a rule of thumb anywhere from 3 to 5%. So maybe if you have a smaller account, maybe you want to go for 5% because you want to build that account a little bit more. So any trade, if you multiply your account balance by the percentage, so $50. So on any trade, you want to set your stop loss so that if the trade goes the wrong way, you're only losing $50 out of your 1,000. So you could see here, you'd have to lose 20 trades in a row to equal your $1,000. So that gives you a good chance to recover, a good chance to fix and improve what you did wrong, all those kind of things. And you don't want to risk all your money in one trade unless you're going gambling. If you're going gambling like on roulette and you're putting on red and black, that's a different story. But if you really want to compound your account and grow it in a meaningful and lower risk way, you want to risk probably no more than 5% on any one trade. So that means if you enter a trade, if you're going to cost average into a trade, those buy-ins, you have to figure out, of all the buy-ins that you bought in, your stop loss can't be any more than $50 total. It's not $50 per position. It's $50 for the overall position, but you might have bought your position 4 times. So if you bought your position 4 times, each of those positions you have to divide this by 4. So each position you could only lose $12.50 but the composite of the overall trade, you'll only lose $50 overall, right? So you can't say 5% of every entry. If you enter a single pair 5 times, you can't do $50 per entry. You got to do $50, which is 5% of your overall positions that you bought in. So you buy your positions, you figure out your average price, and then from that average price on how much you have involved in the trade, you figure out 5%, and then you set your stop loss according to that number, composite number. All right, so anyway, I hope that helps or didn't make it any worse for you, but proper risk management, very important. All right, so consider subscribing to my channel, liking the video, sharing the video. Click the little bell so you'll be notified when we hit 2,000 members of the channel. You'll know that we're doing the contest to give away some crypto. And I look forward to you having you as a subscriber and following my channel. Please comment on video topics or types of coins or whatever else you want me to talk about. Again, this channel is for you guys, and if I'm putting out content that you don't want to hear, I think that's pretty meaningless. So I welcome feedback on topics. I welcome feedback on pairs, forex pairs, crypto pairs, different topics of videos. You can look in my video description for the list of things I could talk about, and you let me know what you want me to talk about. All right, take care, guys. Until next video.